So Nvidia is currently, well, they're a multi-trillion-dollar company at this point,
Oh, easily, yeah.
right? They are essentially the undeniable magicians of this whole modern AI boom, just, completely captivating the entire financial world right now.
Absolutely. It's wild to watch.
It really is. I mean, you look at their earnings, their product launches, the sheer scale of their data centers, it honestly feels like they're pulling off this impossible illusion right in front of us.
Like magic.
Exactly. But if you actually want to know how a grand illusion works, you don't stare at the magician. No.
You look for the wires.
You look into the shadows. You look for the stage hands, right? The people managing the trapdoors, routing all the cables, perfectly timing the
Yeah, the
pyrotechnics.
people actually doing the heavy lifting.
Precisely. And today, for our deep dive, our mission is to look at a stagehand. We're unpacking a single, highly dense financial investment note focused on the tech supply chain.
It's a great note, too.
It really is. So, what if I told you that the multi-trillion-dollar AI infrastructure being built right now is utterly dependent on a tiny $1.4 billion company that you have probably never even heard of?
I mean, it completely flips the narrative of how we view the tech sector, right?
Seriously.
The source material we're analyzing today, it's just this incredibly specific financial investment note. It goes
Yeah.
deep, deep inside the tech supply chain.
Yeah, it's pretty dense.
Very dense. But the author synthesized all these multiple, seemingly disconnected data points across, manufacturing and finance.
Just to spot this invisible pattern.
Exactly. We are looking at a hyper-specialized company handling the physical bottleneck of AI hardware.
Right.
So for you listening, understanding this note, it doesn't just give you a single stock analysis.
Yeah.
It provides a structural map of how value actually trickles down and gets trapped in a market that feels completely overcrowded with giants.
Yeah, we are tracing that supply web to find the hidden gems today. So the investment note focuses on a company called Shunsin.
Right, spelled Shunsin.
Yes. And they're listed on the Taiwan Stock Exchange, ticker 6451. Right off the bat, the author points out their market cap, which is roughly $1.4 billion.
Which is tiny.
I mean, in the mega cap tech environment we live in today, 1.4 billion is almost a rounding error.
Yeah, it's practically invisible to the mainstream financial press.
Totally invisible. But their primary field, and this is what triggered this entire deep dive, is photonics packaging.
Right.
And to understand why a $1.4 billion photonics company is positioned to capture massive value, we really have to establish who the players are, like their corporate lineage.
That lineage is everything.
It is, because Shunsin is a subsidiary of Foxconn, and Foxconn operates as an original design manufacturer and ODM for Nvidia.
And that corporate lineage right there,
Yeah.
that is the foundation of the entire thesis.
Yeah.
It's really worth pausing on what an original design manufacturer actually does, because it's very different from just a traditional contract manufacturer.
Right, the guys who just stamp out parts from a blueprint.
Exactly. An ODM like Foxconn, they often handle the actual design for manufacturing process.
Okay, so they figure out the logistics.
Yeah, the physical logistics, the tooling, assembly line optimization. They source the subcomponents to actually make the product a physical reality at a massive scale.
Wow.
So when NVIDIA designs, a revolutionary new parallel processing chip, they rely on Foxconn's vertically integrated system to physically build those server racks and just get them out the door.
Okay, let's unpack this. Because the source note uses a really fascinating analogy to describe Shunsin's position in this whole Foxconn-NVIDIA dynamic.
Oh, the Marvell analogy.
Yeah. The author compares it to a specialized AI accelerator startup called Celestial. And Celestial getting listed by the massive semiconductor company Marvell, effectively getting what the author calls a free piggyback ride.
Right, exactly.
So basically, is this like buying stock in the obscure company that makes the steering wheels for Ferrari simply because, Ferrari sales are through the roof?
That's actually a pretty good way to think about it.
But wait, I do want to push back on that a bit. I understand the piggyback ride concept. But we are talking about the most lucrative hardware market in human history.
Oh, absolutely. The margins are insane.
Right. So if the margins on this final assembly step are so great, why wouldn't another manufacturing giant simply spin up a competing facility? Or, why wouldn't Nvidia, who has practically infinite resources, just swallow that step of the process themselves, just control their own destiny?
Well, what's fascinating here is it comes down to the brutal physics of the AI arms race.
Okay.
The author highlights this concept of a fast project ramp. You see, NVIDIA's core competency is designing silicon architecture.
Right. The actual chips.
Exactly. If they suddenly decided, hey, let's build our own optical packaging factories, that would take years of capital expenditure.
Oh, sure. Hiring, trial and error.
Yeah, just to reach acceptable yield rates.
Yeah.
And in the AI space right now, a delay of 6 months means you lose the generation. You lose the cycle entirely. Foxconn already has the infrastructure tuned. And the note points out that Shunsin actively markets itself as being supported by Foxconn's vertically integrated supply chain for that rapid deployment.
So competitors just can't easily replicate that.
No, because they don't have the locked-in ODM relationship with Nvidia. Right. And Nvidia is definitely not going to pause their roadmap to wait for a new vendor to figure out the kinks.
So the vertical integration is the shield, and the speed to market is the weapon.
Perfectly said, yeah.
Shunsin is basically already inside the building. They're wearing the tool belt, integrated into the only supply chain fast enough to keep up with Nvidia.
Exactly.
But we really need to look at what Shunsin is actually doing on the assembly line. Like, why are they so irreplaceable?
Right, the specific physical bottleneck.
Yeah. The source note gets incredibly heavy into engineering jargon here. It points out that Shunsin's optical division lists their specific markets as, quote, CPO 51.2T 102.4T and pluggable XCVR 800 G1.6T.
It's a mouthful.
It's a lot of letters and numbers. But we cannot skip over the mechanics of this because the author's entire financial projection hinges on what those acronyms actually mean.
Right, so let's translate that factory floor reality. Let's start with a shift from pluggable XCVR to CPO.
Okay.
So XCVR stands for transceiver. It's a device that can transmit and receive data. For years, the industry standard has been pluggable transceivers running at speeds like 800 gigabits or 1.6 terabits per second.
Which sounds incredibly fast.
It is. But the AI revolution has hit a physical wall with traditional data transmission.
Really? How so?
Well, when computer chips try to talk to each other over traditional copper wiring, at the staggering speeds required for these massive language models, the electrons moving through the copper create resistance.
Oh, right. Basic physics.
Exactly. That resistance generates massive amounts of heat, and the signal degrades rapidly over even super short distances.
So you simply cannot force that much electrical current through copper without melting the cables.
Or just losing the data entirely. The data centers literally cannot cool themselves fast enough right now.
That is wild.
Which is why the industry is migrating to photonics.
Right, using light instead of electricity.
Exactly. Photons don't suffer from that same resistance.
Yeah.
But to do this, you have to transition to co-packaged optics, or CPO.
Okay, so that's the CPO acronym.
Yes, and the 51.2T and 102.4T in the source, that refers to terabits per second, mind-bending data throughput.
Wow.
So co-packaged optics means you take the optical light engine and you physically package it on the exact same substrate right next to the silicon chip.
Oh, so you're eliminating the distance the electrical signal has to travel before it becomes light.
Precisely.
Okay, I want to make sure the physical mechanism is clear for you listening. Basically, trying to push modern AI data through copper wiring is like trying to force a high-pressure fire hose of water through a standard garden hose.
That's a great analogy. It just bursts.
Right, it bursts. So co-packaged optics is basically the process of converting that messy fire hose of water into a perfectly focused, invisible laser beam, one that can travel instantly without losing a drop.
Exactly.
But taking microscopic fiber optic strands and physically aligning them with the silicon chip so the laser doesn't miss its target, I mean, that sounds like an absolute nightmare of mechanical precision.
Nightmare is the perfect word for it, honestly. We're talking about alignment tolerances at the sub-micron level.
Sub-micron.
Yeah. For context, a human hair is roughly 70 to 100 microns thick.
Oh, wow.
So if the fiber optic channel is misaligned by even a fraction of a single micron, the light scatters.
And the signal drops.
The signal drops, latency spikes, and your multi-million-dollar AI cluster just begins to fail.
That's terrifying for a data center.
It is. So you need hyper-specialized alignment and bonding machines to physically lock those components together permanently without degrading the optical pathway.
Here's where it gets really interesting. This brings us to the crucial supply chain handoff that's detailed in the note.
It's really the smoking gun of the whole investment thesis. The author writes, quote, "If you look at TSM producing CUPE for Nvidia, they don't assemble final fiber arrays racks. Foxconn does."
And TSM is Taiwan Semiconductor.
Exactly. Arguably the most important advanced manufacturing company on Earth. They make the foundational silicon for Nvidia.
Right.
But the source is explicitly pointing out that TSM stops short of the final step.
Yeah, if we connect this to the bigger picture, Taiwan Semiconductor's dominance is in nanometer scale silicon lithography.
Okay.
They essentially bake the core chip. But taking that delicate chip and mechanically wrestling with fiber optic strands to achieve that submicron bonding,
Right, that's totally different.
it requires a completely different discipline of mechanical and optical engineering. TSM purposefully avoids that final packaging headache.
Because it falls outside their primary margin model.
Exactly. So they just hand the big silicon off. Okay, so essentially, Taiwan Semiconductor bakes the cake. But Shunsin, via Foxconn, is the one who puts on the frosting, boxes it up, and makes sure it doesn't fall apart in transit.
That's it, exactly. The materials physically leave the TSM facility, enter the Foxconn ecosystem, and because Foxconn handles that brutal mechanical alignment, Nvidia's CPO gear almost certainly passes through Shunsin's machines.
Wow. TSM does the impossible chemistry, but Shunsin handles the microscopic plumbing.
And that handoff represents the final mile of production. It is a massive bottleneck. Shunsin is effectively operating the toll booth at the end of the manufacturing highway.
A $1.4 billion company acting as the mandatory tool booth for a $2 trillion company's most advanced product.
Every single piece of Nvidia's next-generation networking hardware likely has to sit inside a Shunsin machine.
That is staggering. When you frame it like that, the financial realities and the valuation projections in this note start to carry a lot of weight.
Oh, for sure.
If Shunsin holds those keys, we need to examine how the author projects this will impact their stock, and more importantly, who else might be using their services.
Well, the author lays out some aggressive yet structurally logical financial models based on this exact bottleneck. They estimate a 2027 forward PE, a price-to-earnings ratio of roughly 20 for Shunsin.
So what does this all mean? Let's clarify the mechanics of a forward PE for you real quick, because the author's next point relies heavily on it.
Yeah, that's important.
A PE of 20 essentially means investors are willing to pay $20 today for every $1 the company is expected to earn over the next 12 months.
Right.
And in the context of a high-growth tech stock tied to AI, a forward PE of 20 is actually remarkably cheap. But the author emphasizes that this multiple, quote, compresses harder into 2028, 2029.
Which is huge. Multiple compression is basically the holy grail for a value investor in a growth sector.
Oh, definitely.
It happens when a company's underlying earnings are projected to explode upwards faster than the stock price currently reflects.
Right.
So if you buy a stock at a PE of 20, and 2 years from now the company is suddenly generating double the profit while the stock price theoretically remains flat, your effective PE has dropped to 10.
It has compressed.
Yes. Now, the market rarely lets a hypergrowth company sit at a PE of 10. The stock price is almost always bid up to match the new earnings reality.
Of course.
So when the author signals that multiples will compress harder in 2028 and 2029, they are pointing to a massive impending tidal wave of revenue hitting Shunsin's balance sheet.
And that tidal wave isn't just relying on Nvidia, right? The author introduces this whole second layer to the thesis involving other tech superpowers.
Exactly. The note states, quote, and Google, Meta optical switches probably end up through them too, since they scaled Vietnam CPO facilities. Speculative.
Right, because Google and Meta are the structural future of this demand curve. Nvidia is selling the picks and shovels, but Google and Meta are building the actual data center mines.
They need the exact same co-packaged optics to manage the heat.
Yep, for their proprietary silicon. But wait, I want to zero in on the author's use of the word speculative here, because honestly, I think it severely undersells the physical reality they mention in the exact same sentence.
Oh, the Vietnam facilities?
Yes. The author states, as a matter of fact, that Shunsin has scaled Vietnam CPO facilities. You and I both know that you do not pour millions of dollars of concrete, secure land rights, build clean rooms, and import hyper-expensive optical bonding machines in Vietnam on a speculative whim.
No, absolutely not.
Heavy capex is a lagging indicator of shadow demand. Don't companies only build that kind of specialized capacity when they already have line of sight on a massive client?
This raises an important question. That is a phenomenal read of the situation.
Yeah.
You are touching on the difference between a legally signed, publicly disclosed SEC contract and the operational reality of the supply chain.
Right.
The author is being financially prudent by calling the Google and Meta connection speculative. Perhaps the ink isn't dry on a public PR announcement, but the physical footprint, that tells a completely different story.
It tells the story of a company preparing for an absolute onslaught of volume And, the choice of Vietnam is incredibly telling. This isn't just about finding cheap labor.
No, not at all.
This is a highly sophisticated geopolitical maneuver.
Exactly. It aligns perfectly with the China Plus One strategy that American hyperscalers are currently executing.
Yeah, we've seen a lot of that.
Companies like Apple, Google, and Meta, they are terrified of having their critical infrastructure tied to a single geographic point of failure, particularly in mainland China, or even heavily concentrated in Taiwan.
Right, it's just too risky.
So they are actively demanding that their ODM partners diversify their manufacturing footprint to reduce that geopolitical risk.
So if you are Meta and you need millions of optical switches bonded with sub-micron precision, you don't want to reinvent the wheel by training a brand new vendor.
No, you'd lose years.
But you also don't want all your hardware passing through a politically sensitive bottleneck. So you go to Foxconn, your trusted ODM, and Foxconn routes your order straight through Shunsin's newly minted, geopolitically secure facilities in Vietnam.
Yeah.
Shunsin is physically positioning its real estate to capture the risk-averse, massive volume business from the American tech giants.
Which brings the entire thesis of the investment note into focus. The author concludes by saying, quote, basically, you get a free Foxconn piggyback ride with this company at low forward multiples.
That's the core takeaway.
Yeah. You are not gambling on which startup will design a chip that can dethrone Nvidia. You aren't trying to predict the outcome of the AI software wars between Google and OpenAI.
Right, you're looking past all that.
You are investing in the fundamental physics problem of heat and data transfer, and the specific company that owns the mechanical solution to that problem.
It is an incredibly compelling look behind the curtain. I mean, we started this deep dive talking about the magic show of the AI boom, right?
Yeah, the multi-trillion-dollar magicians capturing everyone's attention.
Exactly. But through this single investment note, we've traced the supply web down to the most critical stagehands in the building. We are looking at Shunsin, this $1.4 billion company operating as a subsidiary of Foxconn.
And they are handling the brutal hyper-precise physics of co-packaged optics.
Right. Aligning microscopic lasers and silicon so that massive data centers don't literally melt down. They operate the final toll booth that even a manufacturing god like Taiwan Semiconductor refuses to manage.
And they are doing it with the operational shield of Foxconn, while actively pouring concrete in Vietnam to de-risk the supply chains of future clients like Google and Meta.
All while trading at a forward valuation that suggests massive earnings growth very soon.
Exactly.
So for you listening, this is the entire point of looking past the headlines. If you really want to understand where the tech sector is actually going, you cannot just look at the shiny logos printed on the front of the server boxes.
No, you'll miss the real story.
You have to understand the invisible web. You have to decode the acronyms, map the ODM relationships, and find the specialized manufacturers who are actually solving the physical bottlenecks of the revolution.
Right.
Because that is where the deep structural knowledge lives, and it fundamentally changes how you evaluate value in this market.
The giants capture the imagination, but the supply chain captures the reality.
Very well put.
As we wrap up, I want to leave you with a final thought to consider, especially based on the sheer concentration of power we've uncovered today.
Oh, this should be good.
Well, we've established that a single, relatively tiny $1.4 billion company provides the microscopic alignment required for the multi-trillion-dollar infrastructure of companies like Nvidia, and likely the future builds for Google and Meta.
Right. They're the final gatekeepers of the hardware.
Exactly. But what happens to the global AI arms race if a highly specialized, localized puzzle piece like Shunsin experiences a sudden, unforeseen supply shock?
Oh, wow.
If the stagehand drops the key to the trapdoor, the entire multi-trillion-dollar illusion just grinds to a halt. So as you watch the tech titans battle for dominance tomorrow, ask yourself who really holds the true bottleneck of power in the modern economy.